Hi, this is Kyle Markham with International Futures Group, a division of EFG Group in Chicago. Just want to give you some grain commentary for today, Thursday, April the 23rd. Kind of a strange trade. Let's just start with corn. You know, we were firm initially. Let's recognize, first of all, we still have option expiration tomorrow. We still have the bird flu circulating, and there's a lot of unknowns regarding that issue. But we started out the day last night. Market was rather quiet. We were able to kind of rally into the close. We were right around that 900,000 level on the corn exports. That was supportive. Wheat exports were pretty decent as well. So wheat and corn both higher on the open, and then continued to grind higher for the rest of the day. As we neared the close, corn was, let's say, 2-3 cents off the high, and then here come the sellers. They took it straight down, and you know, we're right back at that 370 level in the May contract. So as much as we are a range-bound affair, starting to ask myself personally, you know, have we gone a few too many times down here? Definitely, I thought the close was very poor, and you know, we'll have to see. Maybe option expiration can give us a hand as far as stabilizing us tomorrow. And then, of course, we have planting progress on Monday. If you see a low number there, maybe that could slow down the corn market. But today, very poor trade in my opinion. And you know, if we can't even hold on to a nickel rally, certainly it indicates the price action is just terrible. Moving on to wheat, you know, Kansas City did okay. I think it was primarily people spreading that Kansas City against Chicago. Obviously, there's just been bloodshed in that spread recently, so today a little bit of relief there. Even still, wheat couldn't really hold on to it, and was actually, Chicago wheat at least, was the weakest of the group today. Gave most of it back into the close, and really doesn't matter what you throw at the market right now. The shorts are in control. The bigger money, or the managed money, excuse me, has that big short position on. They're not backing away from the table, and it's important to remember at this moment in time they're right. And certainly, you know, being long just because there's so many shorts in the market is not necessarily the best, most viable strategy. Nothing really news oriented coming in the wheat market, in my opinion. We'll see. I don't think there's big option expiration activity for wheat. Wheat options obviously are pretty thin anyway, so I would expect it to mostly be in the corn and soybeans. Soybean trade today, we got above our recent highs at 983 in a July contract, but that was it. And one of the things that I pay close attention to is, is meal the leader? I've said it multiple times. Meal was not the leader, and meal was actually 50 cents off the low as we went into the close. Recognize soybean oil up 50-60 ticks, given that crude oil was up $2. So, yeah, I thought the soybean trade today, as much as we were able to take out those recent highs, I didn't think it was a particularly good close. And it's worth noting as well, up around those highs, big volume. Certainly a lot of selling was going on up there today. The way the market closed, I'll be expecting it to be a little bit weaker on the open tonight. For tomorrow's option expiration, obviously you're looking at 980s into May, and then 990 and $10 call options. The 980 calls, yesterday traded under a penny, traded a nickel this morning. We'll see if that can do anything for us. You've got the truck strike going on yet again. Not sure. I mean, yeah, it's a big deal, but we got to recognize there are a lot of beans already in the port in Brazil. And for now, I think that the soybean trade has been primarily a technical affair, and recognize, we're on a pretty good bounce here, a bounce that, in my opinion at least, a lot of fundamentalists would probably tell you is undeserved. So for tomorrow, really anything goes for option expiration. With that said, the last few have been pretty tame, so maybe tomorrow's a little different. But for me, if the meal market doesn't exert some kind of leadership here in the near term, I'm not going to be looking for beans to go a whole lot higher. Initially, I thought if we could get above that 83 level, we'd be at 990 in a hurry, which would probably put you at around 970 in the November, where you'd anticipate big hedge orders. But we couldn't do it today, and for corn, wheat, and soybeans, a pretty poor close all around. So that's all we have for today. Again, I'm Kyle with International Futures Group, a division of EFG Group in Chicago. Thanks for listening, and don't hesitate to give us a call if you have any questions.